Welcome back to Rollup TV. It's Tuesday, July 29th. Beautiful day here in Florida. Got a great stream lined up for you guys today. We've got Kyle from 𝘗𝘗𝘧𝗏 Daily. He just did a podcast with DeFi Dad. Should be a good one, talking about all the ETH digital asset treasury company FOMO. Just want to get kind of an update as to what's going on there, what he's seeing, how he's thinking about that. We've got Matt from Caldera to discuss their token launch. What's going on in Rollup land, what they're seeing from builders. Sovereign SDK just launched their new stack today. Curious what he thinks about that. Curious what he's seeing in the Rollup token space as well, just generally like how these new teams are thinking about tokens and revenues and sequencers and these types of ideas. And then we've got Karia from 𝘗𝘪𝘴𝘵, is the co-founder of WonderFi, who he launched actually with Kevin O'Leary, Mr. Wonderful from Shark Tank, if you know that guy, and also now has built out this company called that is known as xTAO. They've launched a digital asset treasury for 𝘗𝘪𝘴𝘵, what he's calling the Bitcoin of AI. So should be a fun stream. It's Tuesday, July 29th, and yeah, I'm stoked to be here. Rob's gonna be back on the next one later this week. And then next week, we're going to really start ramping up. Had a good Europe summer the last couple weeks, traveling after ECC, and did a lot of kind of like back-end stuff. So getting ready to kind of ramp up the amount of quantity, roll out some new segments, some new shows. Obviously, the live stream era of crypto Twitter has begun. We're excited to be a part of it. We're excited to have been one of the leaders, first movers. So yeah, guys, thanks for being here. Welcome back to the Rollup TV. And yeah, it should be a fun stream today. So if you've been paying attention, and I put out a tweet stating this, which is that we're going to get more digital asset treasury announcements this week and next. I put out that tweet yesterday. I have a screenshot. After I tweeted out that there's going to be a lot more DATs, I put out a tweet that said, there was a screenshot from a VC friend who sent me a text saying like, hey, you know, what are the DAT deals that you have? I had two other friends in the VC world also sent me messages. So there's a lot of demand for these digital asset treasury holding companies. And our first guest, Kyle, will be great to talk about this with. So yeah, guys, other than that, market's a little bit choppy. I've been paying a bit of attention, but I was traveling over the weekend. BTC 117, ETH 3767, Hype 44. Hype went down today for 15 or 20 minutes. I think maybe people were kind of a bit worried about that, but I don't know. It wasn't the worst thing in the world. I think there was a lot of Solana haters coming out for that one. So, but yeah, guys, we have Kyle in the back, so we're gonna get him up. You're watching the Rollup TV. It's Tuesday, July 29th. And again, I think this segment's going to be based off his recent podcast with DeFi Dad, but also just some of the things that he's seeing in the media world, in the DAT world. I'm calling it DAT FOMO. So Kyle's in the back. Let's get him up and welcome him to the show. Kyle, man, what's going on? Yeah, man, I just saw that podcast with DeFi Dad. ETH DAT FOMO is on, man. Jeez. It is. Yeah. So, man, something interesting happened today, which is Tom Lee and their kind of DAT situation there. They actually announced that they're going to be buying back common shares of the stock rather than using some capital to buy more ETH. People are kind of going back and forth about why they would do this, what the effect is on the premium in terms of the value of the stock compared to the underlying assets. Do you have any insights on this? Why do you think Tom Lee decided to buy more of the actual common shares of the Bitmine company rather than using that capital to buy more ETH?
Yeah, I don't know exactly why. I obviously haven't spoken to them or like tried to figure out ask them about their strategy or anything like that. But I would imagine they're doing it because they think that their stock is undervalued and they think it's a better opportunity. The MNAV, or the premium to NAV for Bitmain, has gone down a lot since they've raised a ton, and they've bought, I think they're at like 620,000 or something ETH as of today. So they're, they've ramped 620,000. Yes, they've ramped it up a ton. I assume they just think it's undervalued, and so they want to buy it at a good opportunity. That's kind of what they said in their tweet, is like, we look for where the best opportunity is to allocate capital. Is that a smart decision? I honestly have no idea. We haven't really seen this before, but I imagine, from what I understand, they have a really good team, and they're building some pretty cool stuff, and they're going to try and do what's best for investors. And so I think that this is what they think is. So I'm interested to see how it plays out, but we love buybacks in crypto, so why not?
Yeah, man. My take is that I think that the Ethereum and Bitcoin side of things when it comes to these companies is somewhat under control. I think we're going to start to see some really rambunctious behavior on the like smaller cap tokens that we're already seeing. Sui just had one announced. I think Tron announced a $1 billion debt. The level of yeah, man, exactly. I think there's one for SQD coming out. Man, so this is all kind of happening all at once here, and I have this tweet coming out later today that I was like, we asked for new use cases and consumer app breakthroughs and all these things, and what we got this cycle wasn't necessarily that in terms of adoption and perception changes. It was actually like, we've just had now these traditional finance people come on and start to push our industry forward in the biggest way possible on national TV. I don't know, man. Something just doesn't feel right about all of this. But there's haters on this, and there's people that just think that it's totally fine and that there isn't any kind of wrongdoing that could happen. I don't know. Where do you stand?
Well, so I think for a long time, at least in the Ethereum community, we've talked about the DeFi mullet, right? We've kind of said that we're going to build these cool DeFi products, and then fintech and banks, whatever, they're going to wrap them in a nice little bow, and they're going to make the UX beautiful for us, because that's not what we do. We're here building decentralized protocols, trying to create new financial services, and we'll let the fintech companies kind of do what they need to do to make it actually get used. And I think that's exactly what these things are. These DATs, they're just wrappers for ETH, they're wrappers for Sol and whoever else, and they're gonna go and take all the complexities out of using DeFi. Like if you buy Aspect today, or you buy Bitmine, or you buy any of these, all they're doing is buying ETH on your behalf, raising capital to get more ETH, and then going and deploying it in things like staking protocols, restaking protocols, Aave, et cetera. All the things that us degens do and have done for many, many years. And the reality is, most of the world was never gonna do that. They were never gonna get a MetaMask wallet and like change their fiat into ETH and custody it themselves, and then go like use Aave and take it. Like most mainstream people don't do that. And even a lot of the like institutional side, as much as they understand it and would probably like to do it, they just like are not allowed to do it. And so I think what these are is just wrappers to allow public market capital to come in and get some access and some exposure to DeFi yields into these assets. And so I think it's a net positive. I had said for a long time that I don't know that we necessarily need more use cases in crypto. Like we've built a bunch, we just need people to use them finally, right? Like we've had stable coins for like 6-7 years or whatever it's been, just no one's ever used them. And it's not like we need to do much different than what we already have. We just need to get it in the hands of the people who need it. And same with DeFi. Like Aave is the same as it's been for many years. They've had upgrades, of course, but like Aave is still Aave. You can lend and you can borrow on it, and it works great. Just a lot of people don't access it. And so like these are just vehicles to access that stuff. And I think that that's a really, really good thing for this industry, because otherwise we weren't moving the needle much, right? Like there's a reason why Bitcoin has dominated for the last 3 years. It's because public market capital couldn't get into Ethereum and couldn't get into DeFi. Gary Gensler wouldn't let it happen. We didn't really have access vehicles like we have today. And so I think these are a really good thing for the space to just bring capital in, which is what we've been sitting here waiting for many years.
Yeah. I mean, capital, and I think a perception change as well. I think that having older folks go on, national television and speak about these things in a investor friendly way is super positive for the space as a whole. So
yeah, well, and the earnings reports that they're going to have to do now every quarter, right? Like we've had just Coinbase doing this for years, which has been great. They've been a good steward for this industry to help try to get Wall Street to wrap their heads around this. And then you had MicroStrategy, which was like useful to help people understand Bitcoin, and that worked. And that's why Bitcoin's done so well over the last 3 years. but Michael Saylor kind of does it his own way. But now we have people like Joe Lubin and Tom Lee, and the list goes on and on, that are going to start explaining every little corner of what we do in crypto. And I think like that couldn't be a better thing for Wall Street. So I think this is a necessary next step for the industry.
Yeah, man. Well, look, I got to call you out because you said Pump was bullish a couple days back, and we're going straight to zero, speed run, freaking full sprint, 100-meter dash, right to zero, along with Fartcoin. What's going on over there with Pump?
With Pump, look, I said it was bullish at point whatever it was, right around where it's at now. It's actually up from when I tweeted that. So okay. You called me out, but so far I'm right. But anyway, look, I'm not super bullish on like these launch pads. There's so many of them. Like there's no moat at all. But I think what Pump has done is, one, they're the innovative team that's kind of kicked this whole thing off. They have about $2 billion in their treasury to like use as a war chest to like actually iterate and build things and incentivize or acquire influencers or whatever they're going to do with that money. And I think the big thing they're going to do, and we just saw it today, that they're going to buy back the Pump token. And so like, I don't really play around much in the meme coin world or the degen world. I'm more of like a fundamental side. I love token buybacks. I love revenue. There's this revenue meta, which I think is the dumbest thing ever. It's not a meta. It's just, you need revenue. And I think these guys have nailed that. And yes, their market share is down to like, what, 9% or something. But if they can just hold 9%, for example, they're still making like $4 million a week, right? And if they use that to buy back their own token, then I think we should be much higher from here. So I think the fundamental setup for Pump just, it makes a lot of sense if they do it right. Like they need to get these buybacks in order. They need to make sure people know what they are. Are they going to, do an airdrop and launch some sort of staking? If they kind of go the Sky route, where they actually do some really cool tokenomics, but also like Pumponomics, then I think, there's something that can be really good here with Pump. They haven't really announced much yet. So I think a lot of crypto Twitter has kind of given up and has been very bearish. I tend to like when crypto Twitter gets bearish on things because then I'm a buyer, like they were with ETH a few months ago. And so I like to take the contrarian side there. So I just think it's not a guarantee that Pump wins this battle long term, for sure. It's not even a guarantee that these, meme coin trading and social networks like even becomes a thing. But I just think they probably have the best chance to do it. And more so, I would say in the short term, if you're thinking of like a trade, and I don't trade often, this seems like a perfect setup because it's probably well oversold. And they've got just a ton of money to start doing some sort of incentives that gives them the limelight back. So I can just see them making some wins over the next, couple of weeks here.
Rotating off Pump, I just wanted to bring that up. Wanted to get your take. I think a lot of people lost money on that last couple of weeks.
Sure.
I was fortunate just to kind of have watched it all unfold. But I was tempted. I was really tempted. Coming back to ETH. So recently, Jason Janowitz from Blockworks and Anthony Sassano have been going at it on Twitter about what the right way to think about, Ethereum maximalism versus like leaving Ethereum in bad times, coming back to it. Is it okay to have this kind of like investor's mindset where, strong opinions, but weakly held, basically, whereas Yano's saying like, look, I wasn't a fan of ETH over the last couple months. Its narrative wasn't good. Its roadmap, there wasn't much focus on improving the L1 until recently, et cetera. There weren't really much treasury companies happening. Now he's like, look, I'm bullish on ETH. I think it's exciting. I think that there's a lot going on. And Anthony Sassano's like, well, you can't just change your mind. Your media company isn't credible. He's attacking Yano, and we kind of just have like this like tweet thread going on. Man, what's your take here on this situation and just generally when it comes to kind of like changing your mind when investing in crypto in a world of maximalism, in a world of tribalism? How do you keep your bearing straight in this world where you're trying to outperform the market while also trying to, kind of keep the technology first and keep the best kind of tech to win that's aligned with our ethos and our ideals?
Yeah, for sure. I think they both have good points, sort of. I think as an investor, right, as a technologist, look, you want conviction in your technology and what you're building because it takes 10, 20 years to what you're trying to build to actually like come true and play out, which is what I think the way that Sassano sees it. And then I think, on the Blockworks side, although, Yano doesn't really say that he's a trader all that often, but if you're a trader, then I think it's okay to change your mind, right? People do that all the time. That's why you would buy into something or buy out of something. The way I look at it is I separate Ethereum and ETH. They're two very different things. Ethereum, the technology, I've remained convicted on. I think they've always done the right thing. They've built for the long term. And so every time we've ever talked about Ethereum or ETH at Milk Road, we've always said, look, what Ethereum is doing, we think is the winning strategy. This is what makes sense for the long term. And then we said, look, ETH, it didn't make sense for it to go up, right? We saw a reason why Bitcoin would continue to outperform ETH, and we were very vocal about that too. But it didn't mean we gave up on Ethereum. We continued to support it. We continued to try to build within it. We continue to try to promote what they're doing because we thought the technology makes sense. But there are times, whether you're looking at it from a macro standpoint in terms of the business cycle, where like you might want to be exposed to ETH and you might not, right? At a time when markets are risk on, definitely you want to hold ETH. When markets are risk off, doesn't matter how much you love Ethereum, you can sell that thing and you can get out of it. It's okay. You know, you don't have to be like tied to your bags, which I think that's what SaaS does. So for me, I just try not to get like too religious over anything and over any investment. You see that a lot with things like Tesla or Bitcoin or ETH, right? Like people just get so religious over these things. And I think that's not the way to do it. It's okay to support something for forever. And I will always support Ethereum because I love their values and ethos and what they're doing. But like, there are times in the business cycle where I own a lot more Bitcoin or I own a lot more cash than I do ETH. And also like, I think it makes sense. There wasn't a lot of demand for ETH for a while. It wasn't really accessible on public markets other than the ETFs. But those didn't do that well because you couldn't get yield from it. There was no staking. And so like, there wasn't a reason for a while for people to buy ETH. But when Joe Lubin launched SBET, it was like, okay, here it is. Here's your public vehicle that can actually go and raise capital to buy this. There's the demand we've been waiting for ETH. And so I think, for me, I've always been bullish, at least on Ethereum. But when Joe Lubin finally made that move, I was like, okay, here's the demand we needed for ETH. And I definitely turned a lot more bullish. Now, I guess I wasn't as publicly hating on ETH as Yana does. I think the one thing we can do is like, it's hard to do what we're trying to do in crypto. We're trying to revolutionize the financial system and beyond the internet, really. So like, I always just want to spread positivity rather than put something down. So I think like, it's okay to change your mind on an investment, but I think you should still try to support the industry as much as you can, which, to be honest, I think Blockworks did. I don't think that they really like bashed ETH too much or like slowed down Ethereum's growth. So I think it's just getting blown out of proportion a little bit here. Yeah.
I mean, it's crazy how much demand for ETH these DATs have created. I mean, just for all of the tokens, it feels impossible to be bearish on ETH here. Even on Bitcoin too, and on anything that has one of these treasury companies, it's just to the magnitude that ETH has or BTC has. It's just, I mean, this is unprecedented. Like it's funny. I thought that the institutional adoption, that the mainstream adoption was going to come through the ETFs. I was like, totally, that was what, like, early on in the cycle per se, that was my thought. We got the ETFs, as you said. ETH had no flows. BTC took all the flows. That's flipped dramatically in the last 2 weeks. ETH has actually had more flows than BTC on, given 2-3 day periods, even over the last like maybe 10-ish days.
Double the amount of inflows in the last 2 weeks. So
there you go.
Massive, which is crazy because it's 1/5 the size, right? It's wild.
Exactly. So like, and the treasury companies, the buying power actually has a substantially more of an impact on Ethereum than on Bitcoin. Are you holding more ETH or Bitcoin now?
I am probably about 50-50. I would say maybe ETH is skewed to the upside now since ETH has just outperformed so much in the last few weeks. There was a while, like last year, I started selling a lot of my ETH into Bitcoin, which proved to be a smart move. And then as soon as Joe announced, I was like, finally, I love ETH. Like, I want ETH to go up. I think it makes sense
to buy it.
And I just needed the reason. And finally, after he announced that, I was like, okay. So I moved a lot more in, but I kept it around 50-50. But I think, ETH is almost doubled what Bitcoin has in the last, been like 2 months. So I would assume it's higher now. I'm across a lot of wallets, so it's hard to keep track at this point. But yeah, I mean, the demand for ETH is massive. It's still not as big as Bitcoin in terms of these ETH treasury companies. Like, I think Saylor is raising like $1 billion a week almost. And you add Metaplanet and that onto it, and you're getting close to $1 billion every week. Whereas the ETH ones are maybe like 500 million. I mean, we had one raise started today, what's called 𝘗𝘳𝘃𝗧𝗍 or something that just launched like an hour or two ago. They raised another 425 million. So like, you're probably half the capital in these ETH treasury companies as you're getting the Bitcoin ones. But again, we're 1/5 the size. And so it's going to make a lot more of a difference for sure. And then not to mention, they're also staking that and putting it in DeFi and restaking and all these kind of things. And so I think the impact is going to be way bigger. And also Bitcoin's had this now for, 5 years. Saylor launched this thing in 2020, around the same market cap as what ETH is at today. So, $1 billion buy on Bitcoin doesn't do as much as it used to, but that'll do a lot on ETH. And I think we're just getting started here. Like there's now 9 or something companies that are doing this. But I think they're just kind of like unlocking their investment sort of like flywheels. So I think their numbers are about to pick up. There's more companies. We still are mainly just in the US. There's going to be UK ones. There's going to be India and Japan and whatever. And I think there's going to be more financial engineering, right? Like Strategy has like 5 different types of instruments that you can buy to allocate to this thing. Whereas none of these have that yet. They just have the ability to like sell common shares. So there's going to be a lot more coming from these guys in the near, probably a few weeks to months. So I just think like this demand's probably picking up from here, not getting less. So it's pretty crazy.
Yeah. I'm curious if you think that the actual dollars and capital allocation that's happening into these DATs is taking away from like that speculative capital that would be entering the market for other tokens. So let me just kind of rephrase this. Pump raised 750 million from like liquid funds and VCs. And I saw this tweet from Arthur OX that was like, it was a screenshot of a Telegram chat. And it was like, there's probably about $15 billion of like venture and liquid capital from like these types of people, if you will, or entities in the space. And so Pump just basically raised 5% of like the available investable capital, theoretically, right? By some approximation of whether it's 15 bill, 25 bill, in that range. And that takes away from like bid from all these, like let's just list any other token. Do you think that, given that today, right, Electric Capital, Arca, a lot of big funds in the space, Big Brain did 𝘬, a lot of these others, Archetype, they're investing into these DATs. Do you think that this capital is kind of siphoning away the capital that would previously be buying like Chainlink and Aave and Maker and Hyperliquid? Or do you think that it's just kind of like, okay, we're going to allocate this capital here. It's a short kind of duration bet. We get our maturity in like, I think it's like 60 days even. And then that capital kind of gets recycled into other things. Like, how do you think the FOMO for DATs is affecting the way that capital allocators in crypto are looking to allocate?
So I've had a thesis for about maybe 6 to 9 months now where I kind of realized that there's not a lot of new capital coming into this space. And really the reason for that is because all the money's in the public markets, right? There's not a lot of money in the sort of crypto native, like on-chain flows. There's just not a lot of new capital anyway, not from since last cycle. And so I kind of realized that, hey, the assets that you can access through public markets are the ones that are actually going to do well. And that's why Bitcoin has done so well over the last, this bull market, is because, institutions, sovereigns, et cetera, who can't come on chain. Like if you think about it, 99% of the world's capital actually can't come on chain and buy digital assets, whether that's because of regulation, whether that's because of risks, whether that's because custodial issues, third party stuff. Like there's a lot of different reasons why they can't just hold a digital asset. It's actually been illegal for a lot of them for a while now. It's only just starting to change as we got rid of 𝘰𝘮𝘧𝘭𝘵 and Trump's come in, and we're just getting these bills passed now. And so like most of the world's capital just actually can't hold digital assets. Even if they wanted to, they can't, right? And so what I sort of realized is like, hey, any asset that is available on public markets in a format that like these institutions can actually buy, so whether it's an ETF or like a company on the NASDAQ or something, that's where the capital is going to flow in, right? They're not going to try and come around and like buy it OTC because they just can't really do that stuff and actually get on chain. So that's why when Joe Lubin said, hey, we're launching SBET, I was like, okay, there it is. Finally, we have the unlock that can come and actually buy this stuff. And then you have like, let's say Athena, you've got Solana that has this, you've got, a few others. To me, this is where the capital is coming in. And I just don't think, so like, is it taking away? I'm not sure, because I just don't think that capital is coming on chain regardless. I think we've been in this like PvP era for a long time where like the money that's in crypto, that's on chain, has just been the same for a while. Of course, there's a little bit of growth, but it's very small. And it's just been moving from one thing to the next, which is why like Solana was where all the capital went, and then all of a sudden Hyperliquid did well, and a lot, Solana's done worse while Hyperliquid's done better. It's like that capital is just moving around, and the net new capital is coming from public markets only. And so that's why Bitcoin's had this leg up for a while. It's why last year I moved a lot of my money into my assets into Bitcoin, because I just could tell it had the bid, and it was going to continue that until something changed. Finally, it's changed here with ETH. I'm sure there'll be a few more. Plus, there's about to be like the indexes that come in. So you have like the Coin 50 or whatever Coinbase's index is, where they're taking like the top 50 tokens. I think CoinDesk is also doing this. There's a few others. Those aren't in good enough wrappers for institutions to buy yet, but it will be soon. So I think you'll start to catch a bid down the leaderboard a little bit to top 50, maybe you get to top 100. But again, it's going to be dispersed by market cap. So it's going to be a small bid for those. But the other thing I think that you're having too is, as these ETH treasury companies buy things, deploy that capital into things like Aave's revenue goes up a lot. And what do? They buy back their own token. So you sort of have these indirect ways that these DATs do give capital into some of the like alt tokens, let's call it, but it's very few. Now, of course, you have the wealth effect. Those who hold ETH are going to, let's say we double from here, whatever, they're going to sell, they're going to buy some DeFi tokens, things like you'll always have that. I think we'll still grow from last cycle, but I don't think we're going to have every token do well like we've had in previous cycles, because we need the big money to move these things now, and that remains in public markets. And I just, they're going to come on chain. It's going to take a lot longer than people think.
Yeah. So basically, if you're a head of strategy at a foundation, you need a DAT.
Yeah, well, they're all doing it right now. Like, this isn't stopping. They're all definitely.
Are you seeing any decks for it, or like investment opportunities, or not really?
Sorry, say that again.
Are you seeing like any investment opportunities come to your desk for them?
Yeah, we've had a bunch. So I also run a marketing agency, so we actually work with a lot of these DATs, and we run their PR and their social media and stuff. And some of the smaller ones too have asked us, like, can we be on the board? Can we help in this way and that? So there's a lot of them getting real scrappy here, where I think when you go down the totem pole of the tokens, they can't really get the big investments they want. And so they're like going to friends and family, and those kind of scare me a little bit, because you need consistent bids, or otherwise like you're going to lose and you're not going to have your premium. You're going to go into a discount. So like, I'm not really getting involved in many of these. The Ethereum ones make sense. I think the Sol ones make sense. There's a few DeFi ones where they generate revenue. They've got a real product, like Athena one, I think is quite exciting. Yeah. It's kind of your stablecoins are the biggest thing in TradFi right now, and the only exposure they can get is something like Circle. So I think like an Athena one could do well. They're going to be a few months until they actually can go live. So I think there's a demand for those, but like getting down the risk curve here, I don't know if there's going to be demand for all these other ones. Yeah. So I'm not getting involved in many of them, to be honest.
Yeah. Cool. Stay safe out there, Kyle. I appreciate you coming on. I think we're going to see 4K ETH, if not this week, then next. So keep your pants on. All right.
Absolutely. 4K. That's bearish, man.
That's super.
We're going much higher.
Keep up the great work at Milk Road. Been a fan, man, and I appreciate you joining us today.
Thanks. Appreciate you having me. Your show's awesome. So keep it up, man. I know this is probably hard work going live and having all these people come in. It's a wild setup, but good for you guys.
Cheers, man. Alrighty, guys. That was Kyle from Milk Road. So he recently did a podcast with DeFi Dad about ETH DATs. Got to watch some of it. Got some insights there. I think the particular insight that I think is interesting for you guys, and just in general for the space, is thinking, one, if your token that you're trying to buy and investing in doesn't have a DAT, you probably need to look around at what is going to be, actually have one of these, and kind of reconsider. Two, actually, a lot of the tokens that I'm seeing are actually pumping well before the DAT is announced. That is something that we didn't cover, but you can see it across the board. You saw it with Athena. You'll see it with other tokens. So be aware if you see some like big pumps happening before these. That's kind of what's happening, whether it's like insiders or whether it's just kind of the market getting ready for it. That's that. The last thing I just think was like his thought around, okay, look, if you are investing in these things, probably want to stick to like the bigger ones. Obviously, that's not going to be for us, for our kind of investment appetite or opportunity. It's more for like big funds. So yeah, that was interesting. So up next, we've got Karia Samaroo of WonderFi and xTAO. So this should be interesting. So these guys are putting out actually basically what is the DAT for BitTensor. I'd like to get caught up as to kind of like where they're at, what the deal is there. So looking forward to chatting with Karia. I think he's in the back. I think we're probably ready to go. So we'll get him up here in just a sec. Otherwise, guys, yeah, it feels good to be back on air. A little bit run down today from the travel, but doing all right. And yeah, get Karia in here next and get firing. DATs, man, these are something else. Been an absolute journey watching these things unfold. I mean, I believe Saylor just got 2.5 billion on hand today. FOMC tomorrow. We've got Karia in the building, in the back. Let's get him up here and let's talk about what they're doing. What's up, Karia? How are you, man?
Hey, Andy. Doing good. How are you?
Doing pretty well. I just talked to Kyle from Milk Road. We're one of the co-founders. They're a pretty big media company in the space. They just did a podcast about Ethereum DATs. I think that the topic of today's show is certainly around these crypto treasury companies. No better guy to talk to you or to talk about it with than you, man. Good to have you on. And yeah, man, welcome to the show.
Yeah, appreciate you having me.
Yeah, man. All right, so you're involved in multiple things in the space. I think the pressing thing that I'm curious about is around your involvement with BitTensor, xTAO, your thoughts on these treasury companies. Would love to talk about WonderFi, Robinhood, how that kind of all came about. But I think you guys were one of the first kind of like non-Bitcoin or Ethereum treasury companies. I feel like you guys started this before it was kind of the hot thing to do. How did you guys find out about this opportunity? What's the story behind xTAO and your involvement in BitTensor?
Yeah, for sure. So I'm going to date myself by telling you the origin story, because the inspiration for xTAO was I had been building in BitTensor for about a year or so, saw the incredible potential, just wanted to dedicate kind of the next chapter to that after WonderFi. And it reminded me of when I first got into Bitcoin, and this was 2016. It was really just crypto community that was focused on Bitcoin. There wasn't really anything that was getting like more of the broader public into the space. And then the first Bitcoin miner went public, and it was a business model people could wrap their heads around, backed by this high growth asset. And to me, that created this huge inflow of just interest and understanding about Bitcoin. And so that was the inspiration for xTAO when I started this in October last year, was create something that an investor and a Bitcoin miner can understand and have a sound business behind it, something that's cash flow positive, generates revenue, but then it's also backed by this asset that I think is going to be a top 3 crypto asset in the next 4 or 5 years.
So is the publicly traded company, is that called xTAO?
Yes, it is.
Okay. What is the premium to the NAV as it exists today?
So we're announcing our holdings actually tomorrow. So you'll be able to
It's not public already.
It's not public yet, but you can kind of reverse engineer it a bit. But we raised 23 million US, and the majority of that has been used to buy 𝘗. So I think that'll make us the largest public holder of 𝘗, and we're going to be aggressively accumulating more, but really also focused on, the core focus of the business is operating this validator and growing that, and then investing in other infrastructure in the ecosystem. I think there's a ton of value. You guys are talking a lot about the DATs, for good reason. I think they're so great for the ecosystem. We obviously have a large treasury, but we'll continue to run the operating business, and I think they're complementary, and I think that's important for an asset like BitTensor. I look at it a little bit differently than some of the Bitcoin treasury companies and some of the more established assets.
Yeah, so you're not just running this xTAO company just to accumulate as much BitTensor as possible necessarily. You're also trying to run validators and invest and expand the BitTensor ecosystem, basically.
Yeah, exactly. I think that's how we can bring the most value, and we want to be an institutional product for 𝘗 that has the most credible kind of capital structure. Like, I think, I'm my background's a kind of finance and securities law, so I'll never be able to get away from how important I think capital structure is in these vehicles, and I think it's so cool to see how many different styles there are. But I think for us, that was a focus from day one, was just having a very sound, high integrity capital structure that can last. Because again, I think for assets like BitTensor, they're way more nascent than Bitcoin, ETH, Solana, of course. So you potentially will have much larger drawdowns, and so I think you need something that that's generating revenue. You need something that's sustainable and that can make it through the next bear market. That's key in my opinion.
Yeah. I'm a little bit worried about how a 60% drop on some of these tokens affects these treasury companies.
Yeah, I am as well.
Yeah.
I think it's a big issue, because especially, I mean, you guys are, I'm sure, experts or becoming experts in the DAT structures, but it's interesting because a lot of the pipes they're going into existing NASDAQ operating companies that have an existing business. They have, relatively high burn. They need to keep the existing non-crypto business going for regulatory reasons. And so that looks fine right now, and that's great. I think that, and especially with something like Bitcoin, ETH, or Sol, I don't like, for Bitcoin, I don't think you were going to see a 90% drawdown. But I think when it's something that's newer and people are not as bought in on, there's going to be more conflict that comes up when we go into a crypto bear market, and a company has 100 million or 400 million or whatever it is of this particular crypto asset, and then it draws down. I think it's going to create a lot of pressure around what the company does next, and how it can sustain itself. And then also, if it's burning that much and it's then going to be burning cash, it's going to create a forced sell, like drawdown of the assets and forced sales, I think. So I think something that can be cash flow positive despite a large drawdown is really critical for doing a treasury strategy with something like BitTensor or other non top 3 assets, I'd say.
So in today's 𝘰𝘳𝘰𝘍, I think is what was announced, 425 million or something. In the last post of their tweet, they said normal operations of our company will continue, basically. And you're saying, and this is a known fact, that effectively these companies can't just turn into straight crypto accumulation vehicles. They need to, for the sake of optics per se, they need to keep their business going, earn some revenue from that, but then on the side they can do these crypto accumulation things.
Yeah. So basically, the structure and I need to dive deeper into the one that was announced today. But basically, so like with SBET, for example, the ETH treasury strategy that I think was kind of the big first pipe.
Yeah.
There's a legacy business. I think typically the company, the investor groups that are putting this capital in are sourcing NASDAQ operating companies that are sort of between like a $5 and $10 million market cap. And then they're typically burning, maybe between 4 to 8 million a year on the legacy business. And then the investor group comes in, puts in all this capital, it gets allocated all under a asset management agreement. So it's basically ring fenced from the existing legacy business. So the existing operators, CEO, et cetera, are focused on, the gaming business or the solar business or whatever that focus might be. And then all of the new capital that comes in is, or the vast majority of it is focused on just, accumulating ETH or whatever the asset is. And then you kind of have usually one person, like a CIO or something like that, that is responsible for that. So that burn is going to continue. I'm a lot less concerned about that with something like Bitcoin or ETH when they're raising these huge pipes. I just feel like that will resolve itself, and they'll be able to sort of slowly transition the the board and things like that to just truly become like a pure crypto treasury play. But I think with something that is a lot more volatile, there's way more risk around it. So that's a concern, I think, in my eyes.
Interesting. So when you were looking at the landscape for doing one of these DATs or pipes, as you call them, you settled on BitTensor, being previously exposed to the ecosystem and bullish on it. What makes you so bullish on BitTensor? Like, why is this something worth accumulating? Why do you want to accumulate more? What's your frame of reference for where BitTensor is going to go?
Yeah. So for me, I think that spending a lot of time in the ecosystem and just seeing what is being built gives me the highest conviction and how much talent is being accumulated within BitTensor.
Yeah.
There's over 100 subnets. Everybody is heads down building, and it's still early. So some of the subnets are not really creating value. A lot of them are starting to do that. And I think, to me, from a time evolution standpoint, it's pre-first halving for BitTensor. So it's like Bitcoin in the first part of 2012. So really hard to see exactly kind of how big this is going to be. But I think that it has all the right indications so far. And so that's a big part of it for me. And then I think that more kind of superficially, I think one of the key things of creating a massively successful crypto asset that we've only seen with a few is something that non-crypto people can understand and wrap their heads around. And so BitTensor is not quite there yet. Most people in the ecosystem can't really explain what BitTensor is. But I do think that having the same tokenomics and a lot of similarities to Bitcoin is going to help bridge that gap for people. And so that's I found that is a really helpful way to bring people into BitTensor, is just saying, okay, you understand Bitcoin, you invested in Hut 8 or Marathon or MicroStrategy. This is BitTensor, and it's taking Bitcoin structure and applying it into creating useful AI. And it's really early, but it's starting to pump out some really, really interesting things.
So you're gonna accumulate a ton more then?
Yes, we'll be aggressively buying 𝘗 for sure.
Do you have like a supply goal, like a supply target? What percentage?
Yeah. I feel like I don't want to put out a number yet, but I think that particularly because we will be investing in building infrastructure, and then we are going to be looking at working with different subnets also. That I think is, there's a key gap there where subnets need to be able to reach mainstream investors also. And I think that xTAO is really well positioned to do that. So we're going to be aggressively growing, but I don't have a specific number right now.
Yeah, I think some of these ETH ones are trying to hit, I think Tom Lee said he's trying to hit 5% of the ETH supply.
Right. Yeah, that's a big number.
That's a lot. Yeah. It's actually quite the paradox here with these accumulation vehicles. It's like, you accumulate all this supply of these networks, which is great for the asset price, but then you get a lot of the ownership of these networks effectively in traditional finance vehicles.
Mm-hmm. Yeah, it is very interesting. And and then you're starting to see the, like, Robinhood, and FTX had done this previously, but tokenized equities. So you have now tokenized versions of the stock that is a holding company for the asset.
It's like a full circle, right? It's like the snake eating its tail.
Yeah, exactly.
Yeah. So do you think that this entire concept of these pipes or DATs, like, is this going to end at a certain point, whether it's because of like blowups or deleveraging or people just moving on to the next hot thing? Like maybe if you could take a wild guess or prediction, like, what does the next 6 to 12 months look like for these companies? Like, Are we going to get them
Yeah.
for every asset? Are people going to start copying you and just do 𝘗𝘓𝘃𝑒𝑛𝑠or ones and just like there's going to like what is your like vision for how this is going to play out for the industry?
Yeah, I definitely think it's extremely hot right now, and so I feel like we're somewhere in the in the peak of that, or at least approaching it. I think that I think they're great for the ecosystem just in general. I think that being just going back to 𝘗𝘪, what 𝘗𝘪 did, being able to create this bridge for investors that can't invest in Bitcoin to come into Bitcoin, it was genius. And and to as he admits, was sort of a mistake almost. Like he just kind of stumbled into it. It's like, oh, we have this massive Bitcoin holding, and now when I'm talking to these different groups, like bond investors or convertible investors, etc., they're like, oh, we can actually come in this way. So I think what he created is really really amazing. I do feel that it will reach a saturation point, at least with new treasury companies coming in for the leading assets, because I think it becomes harder to differentiate. Why would I invest in this versus a MicroStrategy or versus something else? Obviously, there's always going to be NAV kind of arbitrage opportunities and things like that. So maybe that just kind of keeps it going for longer than I'm thinking. But I do think that being able to differentiate with kind of a business model that that is investable and that is sort of is high growth or has the potential of high growth is what this will revert to, and so that's kind of how we've positioned ourselves. But yeah, I think we probably still have quite a lot of legs left right now. So yeah, excited to see the next six to 12 months unfold.
So maybe like more alpha, more opportunity in these DATs or pipes for different tokens like 𝘗𝘓𝘃𝑒𝑛𝑠or, 𝘬, whatever the newer ones are. Maybe less differentiated opportunities in the big tokens. Might as well just buy the established players. Yeah, but I think generally so. Accelerating here.
I think, yeah, I agree.
Yep. Yeah. All right, let's shift gears. WonderFi, Robinhood. You worked with Kevin O'Leary on this, or at least had some sort of association. They call him Mr. Wonderful. You sound Canadian. My parents are from Barrie. I've got the Canadian blood in me.
Nice.
So, yeah, how did you meet Kevin?
Yeah.
How did that unfold? And let's talk about Robinhood, their entrance into crypto.
Yeah. So I founded WonderFi in 2021, start of 2021. And the state of play basically was Canada was not relevant from in the crypto landscape, but there were lots of good teams that were building and lots of smart people, good tech. There were dozens of different crypto exchanges that were in Canada, all competing for the same customers, but nobody had kind of taken the lead. And so the vision with WonderFi was to create a Canadian crypto company that could compete on a global scale. And so basically came in, we created the exchange and brand, which Kevin O'Leary was a big part of. And then we just started bringing in the best tech and talent, and we grew WonderFi to the largest crypto exchange in Canada in the first sort of 2.5 years. But O'Leary, so we had just closed the financing, or we're in the process of closing it, and then we got approached by O'Leary and his team. They were looking at investing in regulated crypto assets, and WonderFi really was well positioned for that. And so yeah, we brought him on as a kind of a lead investor, and I considered him more of like a co-founder because he was so involved with the company. And yeah, was really really great to work with, and helped us get that to where we got it. So yeah, and then I would say when I was still running WonderFi's CEO, we had a bunch of plans for expanding into the US and Australia and kind of globally. And then at the same time, we had a bunch of inbound from different companies that were looking to enter the Canadian market. And to me, what's transpired with Robinhood, it's a best case scenario, because it's even more exciting than a crypto company acquiring WonderFi. It's having a TradFi company
Yeah.
acquire is like, it's just great for the industry. It's really cool to see.
Yeah. So, all right. So quick step back.
Mhm.
Mr. Wonderful, as they call him on Shark Tank.
Mhm.
One of the more, direct, blunt investors on the show.
Yeah.
We'll definitely call, straight shooter. Was there any times in building WonderFi together that Kevin was a straight shooter to you and was like, "Hey, Karia,
Mhm.
listen, man, this needs
Mhm.
to be done this way, or you're not thinking about this correctly," or broadly, like, was there any like key lessons
Mhm.
and
Mhm.
experiences that shaped your entrepreneurial journey that you would share to others as advice, whether they're investors, speculators, builders, etc.?
Yeah, great question. I remember when I first met Kevin, and we were already on this path and had a very clear trajectory for where the company was going. And when he came in, he shared his vision and what he thought he could bring to WonderFi, and it really was this kind of inflection point and decision point, which wasn't clear to me at the time. And I think basically what he said is, Kara, you need to go and do some soul searching and see if this is what you want. This is what I'm going to do. And I think that, so I went back, thought about it, and was like, okay, yes, this is the direction to go. And then once we got a deal signed the next day, and then within a week, I was meeting with CEO of Circle, CEO of FTX, like obviously FTX, that in hindsight issues there, but it was really, he was opening all these doors to all these different crypto companies that were focused on regulatory first. And I think that when opportunity comes knocking, you got to answer. I think that's really one lesson. And then I think the other is that for some people just love doing deals, and some people just are, that's what they eat, sleep, and breathe. And I would put O'Leary in that category. Just put so much energy behind the company, and it was great to work with him on that.
Yeah, man. I mean, I think people thought that when Robinhood was going to enter into crypto, then this WonderFi announcement came out. They thought that with Kevin O'Leary, with what you guys were building, they thought this was the Robinhood, kind of announcement. Obviously, they ended up launching their own chain. But what I came
Yeah.
to realize was that they like, some of the reason why they bought WonderFi, why Robinhood was interested, was for some sort of licensing or some sort of licenses that they needed. Like, what was the actual details there?
Yeah. So in Canada, the reason that Canada is lagging in so many areas, not just crypto, but just in business in general, is over regulation.
Yeah.
And amongst other things, but that is something that Canada has very much overregulated, is crypto in general, crypto exchanges, etc. So we had gone through all of the time, cost, and energy to get all of these licenses in Canada to operate these regulated exchanges. And so that is a big piece, I think, for Robinhood, or anyone entering into the market, is being able to shortcut that process and get entities that are licensed, have a track record, all that stuff. So I do think that's a big part of the equation. One other quick answer to your last question, though. I do think that, and I don't know if it's a lesson or not, but I do think that as an entrepreneur, as a founder, you have the choice when these types of opportunities come, whether it's a new partner, funding, commercial stuff that's going on. I think it's really easy for, especially first-time founders or those that are earlier in their journey, to really get stuck in the spreadsheet of like, what are my economics, like all of that stuff. And I think that in the current environment is, being able to collaborate and bring together a lot of people that have a lot of momentum and force means maybe your economics look different than, when you had initially structured things. But I think it can create this like velocity that's not possible just sort of on your own or with your partners. And so, not to say that's always the right way to go, but I think that I've seen like huge opportunities just get missed because somebody kind of has too tight of a grip on things. So I think there's a bit of a bit of a balance there that can be struck to open up these opportunities.
Yeah, I mean, So we've been building the Rollup, this media platform, for 4.5 years. And the way that we kind of think about it, similar to what you're saying, is we're very, especially in crypto bull markets, very tunnel visioned on, like, we have our business model, we have our team, maybe scale a little bit, we have our offer, we have our systems and processes. Like, we're just very focused. And we don't try to jump on every single opportunity that comes and try to, like, expand there. Like, we're just like, no, like,
Yeah.
just kind of like less is more. But some sort of line between that of balance in terms of this fluidity, where it's like, okay, well, realistically, there is going to be an opportunity that comes up at some point in time if you're properly positioned, which is just, kind of being in the right place at the right time, working, etc. And, like, there is value, as you're saying, in having that agility. I guess, like, the question is like, how good of a decision maker are you to know which ones are worth hopping on?
Yeah, absolutely. And I agree. It's such a balance, because you need to be laser focused on what your core business is, and then you also need to, depending on your role, you need to be able to kind of pull yourself out of that and pull yourself out of that execution mode, and sort of see the opportunities for what they are in really an egoless way, which is really hard, because it is a push and pull, right? I think the more you're relentlessly executing and doing a great job of that, I think the harder it becomes to kind of be truly objective in the way that somebody that's not as attached to the business is, that could see what a growth opportunity looks like. And then again, to your point, in bull markets, you're probably seeing, dozens of opportunities a week or a month, and it's and like that pursuing that is just can be really futile, I think, as well.
Yeah. I have a saying in bull markets. I mean, it goes for life as well, but just less is more. Less
Love
is
that.
more.
Love that.
That's my bull market mantra. All right, kind of coming to a close here, Karia. What is your kind of like, when you're looking at, again, kind of back to stats, back to the AI landscape, back to BitTensor, what is it that you are most interested in inside of the BitTensor ecosystem? Talk to us about some of the subnets, some of the projects, kind of like, what is the actual substance underneath the BitTensor ecosystem that is compelling? If I'm a traditional finance allocator, I want to know what I'm investing into. Talk to me about the ecosystem. Talk to me about BitTensor.
Yeah, I think it's definitely the talent accrual that gets me the most excited right now. I think it's important to contextualize where BitTensor is at in its evolution. It is, to me, it's by far the best shot on goal for a decentralized AI network that competes with any centralized competitor. And I think you're seeing that on specific subnets where they are matching or outperforming centralized models. But it's still so early. So I think the keys to pay attention to really is, talent accrual, how much activity there is on the network. And then you are starting to see some products come out of BitTensor that are getting really high usage and that are high performance. So Shoots, I think, is a really good example. Shoots.ai is the website. It's a open source LLM, and allows you to use DeepSeek and other open source LLMs, all run on BitTensor. And I think it's products like that you don't necessarily need to know that it runs on BitTensor, but it provides something that's super useful. It's an alternative to ChatGPT that doesn't hand over all your data to OpenAI, which I think is a really massive problem, and something that's just growing exponentially. Just how much power is accruing to a few of kind of the large players. And so I think it's products like that provide a really kind of simple interface for people to onboard into BitTensor that get me really excited. And they just announced, I think it's kind of the first Series A for a BitTensor subnet as of yesterday. I think they did a $10 million round from some VCs and some of the Google DeepMind guys and things like that. So that's really exciting to see, and I think it's an indication of where things are going to go with BitTensor in the next little while.
Yeah. I mean, I think it's always a good sign when ecosystem projects are getting funding from, like, a broader kind of like L1 company. Do you think that there's a chance that BitTensor becomes like the AI project for crypto?
Yes, I think it.
Do you
I
think
think
it's there now?
it will. I think that it's on the cusp of that. I think that it has I mean, the structure is there, and I think the fact that you have so many different teams that are building really useful AI products is there. But I think the one of the challenges with crypto is everybody's sort of segmented into different projects, and there's kind of that cult mentality. So I think that it's really going to be BitTensor getting more mainstream adoption that will start to kind of like make it clear that it's the leading decentralized AI play, which I think will happen very in the short term for sure.
Yeah. Karia, man, I appreciate your time. Thanks for joining on Rollup TV today. Congratulations on the success with WonderFi. Looking forward to the announcement tomorrow where you guys unveil your holdings, and hopefully you guys go out there and raise another 8 to 9 figures, buy some more 𝘗𝘗, get the market fired up, man. So best of luck, and hope you manage your risk.
Thanks, man. Great to chat with you.
Yeah, cheers, man. See you soon. All right, guys. That was the DAT portion of our segment today. Of course, we had Kyle and then Karia. Karia is actually quite the entrepreneur with regards to his previous history with WonderFi, obviously. So tomorrow, he said that they're going to release the public holding information of xTAO. xTAO is the publicly traded company for this BitTensor vehicle. That might be alpha. I'm never going to tell you when to buy or sell things, but you guys do know that information will be released tomorrow. I assume that they're also going to then follow that up with an announcement shortly thereafter with regards to potential new funding and what could come there. So yeah, that guy was pretty bright. And anytime that you have a chance to speak to somebody who's been working with Kevin O'Leary, it's a cool opportunity. So guys, that is the status of BitTensor. I haven't really heard too much recently about that ecosystem, but it's definitely an exciting ecosystem. I haven't really invested much in there either, but I know a lot of my whale friends in Telegram who do a lot of trading and investing. They've been big on 𝘗𝘗 for a while. So I know that if 𝘗𝘗 gets a bid, they are going to be bidding and be kind of vocal about it on the timeline and in the kind of OG chats. And when I say whale friends, it's mostly just like OGs from 2017 who are doing TA and have accumulated a lot and get all of the information with regards to early stage DATs, angel deals, kind of what's coming. So they were bullish on 𝘗𝘗 for a while. So all right, last but not least, we've got Matt from Caldera joining us next. Matt is a good friend of the show. He's been on the show for quite a while. Looking forward to having him talk about what they're doing. They've launched the Era token, roll-ups. I'm just curious what's going on. I mean, I think the RAS business has slowed down a bit. So I think I just want to understand what he's seeing from builders' perspectives, post-token. Would like to get the story in as to how that all went and more. So yeah, guys, we'll get Matt up here in a sec. Otherwise, guys, it's been a fun couple weeks after ECC. It was traveling around Europe for a bit, kind of getting settled, doing a lot of like back-end admin scaling stuff, sales processes, refining some things, couple new things rolling out for the brand. Again, we've been working on our venture fund rebrand that's so close, as well as some other things. So looking forward to rolling those out. Last session of the day, and then I'm going to head over to the ARC digital office shortly, actually to meet up with their digital assets team to talk about what they're doing. Maybe meet up with Cathie Wood. Been wanting to get them on the podcast as well. So looking forward to that, guys. And yeah, I think in just a sec, we're going to have Matt from Caldera join us. So stay tuned. We have not used the money panel today. Cha-ching. There it is. Maybe we'll start with Matt for that one. Celebrate his token launch with the confetti and the money ching. So yeah, guys, it's good to be back. again, this is it's been a little slower the last couple of weeks because Rob's been traveling a lot and I was as well, just dealing with some personal stuff, both of our ends. But we're gonna be back in business, ready to go in a couple of basically next week, or the week after. We'll be kind of ramping this up. So new segments coming for you, new features, new opportunities on the Rollup TV, guys. Thanks for joining us. Let's hit the money rain. There it is. There it is. All right, guys, give me 1 second. We'll get Matt up here. We're live. It's the Rollup TV. Where's Rob? No one knows. Pretty good segments today, guys. Pretty good. Tomorrow, by the way, guys, we have FOMC. I think there's a chance that the Fed is going to lower rates. I'm not sure, honestly, but if they were, they would probably just lower it by 25 bips. I saw that the forward guidance guys, Felix and some macro people will be doing a live immediately after. That'll probably be a good one to tune into. Yeah, I mean, I think that what's been nice about the last couple weeks to months in crypto is that we've kind of lost the tracking of the macro that we're usually used to. Previously, we would have this kind of macro focus where, everything that 𝘱𝗫 and Trump does and says affects the market, and, we have to keep tabs, but that's gone away. I do think that that might come back though, if we start to get rate changes. Basically, we had this period as well in 2021 where rates were really low and we didn't really talk about macro. But then as soon as there started to be some changing in rates, then these FOMCs and this entire dialogue actually became an event. And so I anticipate that if there is a change in rates this time around, then once again, there will be more emphasis on, what the Fed's saying and what the macro policy is, because the rates haven't really changed for a while. I think at least this entire year. So it hasn't really been a relevant factor in the market up till now. So that's going on tomorrow. Other news is I think, Saylor got a $2.5 billion fresh powder in his bank account as of today. So I expect him to start buying there and getting that running. Like I said, Tom Lee was actually bringing on was buying his shares of his company rather than buying ETH. So I think that was interesting as well. We'll see how that kind of pans out. And yeah, guys, if you're just tuning in from the Caldera community, welcome. Congratulations on the launch of the 𝘂𝘂 token. I've not checked up on it in a bit. Looks like it's trading at 1.2 today. So congrats if you got the airdrop. Congrats if you're part of that community. I know Matt and team had been waiting to get that firing for a little while. So looking forward to having him on. He should be up here in just a sec, and we'll get this party started. So yeah, I mean, otherwise in the broader news of today, yeah, I mean, we know that BitTensor that the xTAO is gonna bring their public treasury company holdings live in public tomorrow. That should be interesting. And we also know that there's going to be at least one or two other DATs going live this week and next. Can't say what they are, but the word around town, people, if you're in the know, they became public. It's funny how in crypto, these things become public in these VC insider chats because, well, somebody has to buy and put up the capital to participate in these vehicles. And so there's these groups of these insider venture funds and large angel investors that get the inside info per se, or get the intel before the rest of the market does. And then that's kind of revealed later. But where it is revealed and where I would caution you is that as I said earlier, a lot of these tokens are being bought up before the data actually goes live and is announced. And so you'll see that kind of rise in that beforehand. So yeah, guys, that is my 2 cents on the DAT side of things. And yeah, I think we'll get Matt up here shortly. I think we're just gonna running late, having a little issue here. And yeah, guys, talking about the Era launch, talking about the rise of Caldera. I'm curious what the latest is on the meta layer side of things. So we're going to get him up here shortly. If you're tuning in from the Caldera community, welcome to the Rollup TV. This is the crypto founder, builder, live stream of the industry. We are here today with Matt from Caldera coming in hot. Next, I got 20 minutes, then I got a hard stop, and I got to rip it over to the ARC office in St. Pete and get after it. So yeah, guys, he should be joining in a sec, and looking forward to getting him in. I forgot about our effects panel. There we go. We're gonna give Matt a round of applause and a confetti when he joins for the Era launch. We'll see how he feels about that. Otherwise, guys, it's 3:40 p.m. We're in Florida. We're live. We're missing Rob. He'll be back soon. We have some interesting segments coming up for you guys in the coming weeks. Stay tuned on that. Another day in the industry. I think people are getting a little bit irritated with the chop in the market, though. You can see it on the timeline. People are kind of complaining about this or that or the other. Yeah, I mean, in these times, I just kind of zoom out and not really worried about the day-to-day per se. So, guys, if you're tuning in here from the Caldera community, we will be live with Matt in just a second, and we should be good to go. Thanks for tuning in. If it's your first time watching the Rollup TV, then welcome to it. We've got Matt here from Caldera, post-Era launch. He's probably caught up on his sleep by now. Let's get him up here. Matt, what's going on, man? Welcome back.
Hey, thanks for having me.
Yeah, man. You did you get some rest as of recently?
I did, yes. Took the weekend off, so I'm back. I'm well rested. The team is actually almost entirely all here in New York City. We're doing an offsite, so just feeling energized.
Yeah, man. So how did the just take me through the last 10 days? Like, what happened? How you feeling about it all? What is the process like of being a founder launching a token?
Yeah, for sure. So I guess I should start off by saying, I'll speak as in my capacity as an advisor to the foundation. Obviously, I'm a founder of our development company here in America, Constellation Labs. But yeah, man, I guess we launched about 10 days ago. So I guess I should say the last 2 weeks-ish have been totally crazy. We've been really inspired by the community response, especially candidly, I think the launch went better than anyone expected. We came in with high confidence and high expectations, and I think we smashed those. So yeah, overall, people are feeling good. People are excited, and obviously the community response has also been incredible. So overall, just feeling good.
So I got to give you some flack for doing this short airdrop window. What's up with that? Why did Succinct do a 1 week long airdrop window? You guys did a short one, had to claim. I missed the claim. What is the thought process behind teams doing short claim windows for their airdrop?
Yeah, I appreciate the question. I think a lot of it, at least for us, it has nothing to do with supply dynamics or anything like that. It's entirely just the fact that when you're doing a token launch, there's a million things to do. And then, you often don't exactly know the timeline until a couple of weeks before. And then once that timeline is hit, you need to figure out criteria, you need to do your snapshots, you need to get everything sorted on the product and engineering side. And so for us, we opened it and we kept it as long, open for kind of as long as we felt we could. But just the reality of the situation was about a week was basically the longest that we could do. because yeah, just prior to that, it's really hard to know what exactly is going on. The other side of it is obviously snapshots, right? You need to kind of find a balance here of making sure that your more recent community members are still rewarded if they meet the criteria. And obviously, you have to take the snapshot before claims open and the criteria is public. And so for us, the decision was made to do it around a week before. I personally wish it was a little bit longer, but that's the rationale for it.
Got it. Cool, man. So I'm curious. I mean, we haven't spoken in quite a while. I haven't really talked to too many kind of like roll up, platforms, RAS, etc. However you kind of want to think about it. What has been like the last 6 months like on teams wanting to launch chains? Also on the way that builders are thinking about tokens and revenues and such. It feels like a lot has changed in like the zeitgeist in the sense, I mean, probably since we last spoke. What's changed? What are the dynamics of builders now? Is there different preferences? Is it mostly the same? How is that, all kind of evolved?
Yeah, I think one of the themes this year overall is just the increasing maturity of the space.
Yeah.
We're seeing that as well in our customer base. Go back a year before, there were a lot of people who wanted to launch chains, some for good reason, some because the modular narrative was super hot. Now I think we're seeing basically the same levels of demand, but from the teams that we think are like actually best positioned to use a dedicated chain. Even like from the start, we're pretty opinionated. I was never one of those like every app will have its own chain types of people. There are many different trade-offs, just as with building like Web2 applications, right? Are you gonna put it on Vercel? Are you gonna throw a WordPress site on some shared host? Are you gonna do what like OpenAI is doing and build your own data centers? There's a huge kind of array of things you can do. The same is true for Web3. And so what we're seeing is like a lot of teams that we think should launch chains are coming to the table. And actually more of them are coming to the table now than they were before. Just think like big institutions,
Yep.
banks, fintechs, et cetera. Obviously the Robinhood chain announcement is public. Base obviously has been kind of an early mover in that space as well. So we're seeing really solid demand from a lot of these categories that candidly I think are actually like bigger than people launching like a chain for a meme or something like that. But overall, like from our perspective, like things are quite healthy, and they're like from our perspective, it's like the types of teams that we interface with changes, kind of on a quarter or half a year basis, but the level of demand has continued to be strong.
So like the pipeline of teams is drastically different than it was like a year ago.
Yeah. And I think just like crypto overall, it's very cyclical. We're seeing a lot of gaming teams, which we're really excited about now. And then things like institutions, payments, that sort of thing. Yeah. I think those are our two biggest categories. Go back like a year and a half, it was a lot of DeFi. We're able to serve everybody, of course. So that's the thing where there's like the most kind of constant change.
Nice. So now that you've got the token behind you, you've got kind of a fresh start in a way. What is the most important priority for you guys in going into the end of the year? Obviously, there's a lot of there's a lot of FOMO around these DATs and these kind of treasury vehicles. There's a lot of desire for token buybacks, for revenues, for these types of things. There's just a broader institutionalization of the space, RWAs, tokenized equities, these types of things. These are like the core kind of mega hot things right now. But as you say, it's pretty cyclical. Do you guys find yourselves operating or thinking about any of these things, or kind of where are you placing your priorities?
Yeah, as a company overall, like our number one priority has always been just relentless product execution. That's not changing. We've got a lot of really exciting releases coming in the pipeline over the next few months. The biggest one, which we did announce recently, was our meta layer, which is now live on mainnet in a sort of alpha release state. And that's just because we want to be careful around how we onboard users onto that product. But it's live, it's working, it's audited. And so that'll become increasingly open to the public over time, and we're very excited about that. Additionally, one of the things for us that we just sort of see as like one of the more important things of the meta layer that I think isn't talked enough about in the interop space is that ultimately, like, we want the meta layer itself to be a key like go-to-market partner or tool for teams launching their own tokens. So actually, when we launched on Binance Alpha, for example, that was done on BNB chain, and that was actually the first case of the meta layer being used to get a token into a new liquidity venue, PancakeSwap on BNB. But we're going to help teams, who are users of us, and also teams that are new users, launch their token across all sorts of different on-chain liquidity venues. So we're very, very excited about that. You mentioned a lot of these other things, treasury companies. Again, can't share too much there, but it's of course, just like with every crypto company, we're thinking pretty deeply about that. And overall, like for us, like with the launch being so great, the LabCo, owns some of the supply of tokens. We now there's a foundation in the ecosystem that can also help grow the ecosystem. There's just like a lot more ability for us to make really big swings, and so a lot of our strategy for like the next half year is just getting started on a lot of those initiatives and finding ways that we can drive value back into the ecosystem. And then, yeah, last point, you mentioned revenue. Like the great thing about us is like from day one, we've been a revenue generating business with a real mode, a real product, like real users. So as well, like on the revenue front, we're thinking of ways to most effectively use that revenue. And as that meta has kind of come online, again, like we think it puts us in a pretty strong position.
Nice. Okay, so let's talk a bit about the meta layer exactly as to where it's at. So again, last time we spoke, it was kind of more in an iteration phase. Now it seems like you've got this alpha release live. So one functionality that you guys are focusing on is being able to launch for your customers their token on different chains and different dexes across different platforms. Is there also just like there's just like basic asset transfers between chains that are built on Caldera and others? What is like the product roadmap for the meta layer specifically from where it is now into like more of a beta version and then into more of like a fully fledged out version?
Totally, yeah. So the way we conceive about the meta layer internally is we like to think of it as like, we call it a full stack interoperability solution. So one of the needs like we saw in the market currently is that everyone is trying to do a very kind of small piece of the puzzle. And a lot of the challenges, as with any engineering problem, are in like fitting those different pieces together, right? So you have a bunch of messaging protocols, for example, that do great at messaging. But if you want to figure out how to do wrap tokens, as you mentioned, intents, bridging of stablecoins, bridging of majors, bridging of your own token, like you need to bring in all these different partners. And it, first of all, it's just ridiculously expensive. It's also just a huge operational overhead for a lot of teams in the space. And so yeah, like that was kind of what we conceived before. We've been executing on it pretty well. Basically, like the big things we have at the moment are we have a standard messaging protocol, so that can be used, for any sort of cross-chain communication. Like, I want to design some custom NFT contracts that allow you to mint an NFT from Base or Arbitrum or Optimism and have that, sent to Ethereum. Like that works currently. We have an intents layer. And with that, we've partnered with some of the best teams in the space. So teams like Relay, Eco, Cross, et cetera. And that'll be able to, basically we're going to be acting as like a go-to-market partner with them to bring those protocols onto new chains, which is really exciting. And it's something that, again, instead of a team having to like interface with all these other teams directly, they'll be able to kind of use that out of the box. And, we've been working on infrastructure and instant deployments for 3 years. So we're going to be able to kind of supercharge a lot of those teams' ability to deploy across multiple chains. We have our wrap token standard, as was alluded to, that will not be using that intense framework because there's a more efficient way to do bridging with wrap tokens, but it's based on the underlying message passing protocol. And we thought this was actually the most important thing, and it's often kind of underappreciated in crypto, is our like UI and SDK layer. So we have like a bridge interface that works out of the box again, like aggregates over all those other pieces I just mentioned that exist kind of, below the UI. And we have like SDKs, widgets, everything that a team would need to just like get up and running with interop all at once. So effectively with this, we're replacing like the need to work with like 4 or 5 different teams and just kind of aggregating every single piece of the interop stack and offering that to users. And so like roadmap wise, we've been developing a lot of these things in parallel. So a lot of them are basically ready to go. And again, it's just we're doing a staged rollout right now to make sure we can work closely with the initial set of users to make sure we can provide like the best experience possible.
Very cool. Very cool. You know what's interesting about the interop kind of space as a whole is that it's actually kind of shifted now towards being more about asset issuance in some capacity. Like a lot of these interop players, especially like the big ones, they're almost just now becoming asset issuers. They always were, but then if you think about it from like actual off-chain, like, T-bills or whatever it is, these interop players are now becoming the way that money becomes, or that those assets come on chain. And so that's just like one thing that I've started to put together a bit of a mental model for is you've got some of these interoperability providers who are now honestly just operating as asset issuers as well. So, as you kind of interface with more of these players, I think that, you'll start to have an opportunity for the meta layer to be something that brings some of these assets that are off chain on chain and using those, whether it be these tokenized equities or whatever it is, T-bills, stable coins, etc. So definitely a interesting prerogative there, and I'm just glad that you guys saw this through, because I remember this was in just pure idea form as we're thinking about kind of like, okay, how do we go from like being a RAS per se to being like a differentiated product offering that has like a very solid, sustainable long-term plan outside of just kind of building more chains for, viable customers. And it seems like this is something that you guys have ideated on, built out, and now are sticking to, which I think is bullish.
Yeah, exactly. And you're totally right about asset issuers. Like the core part of the pitch is if you're launching a tokenized T-bill, launch on the meta layer and everyone will get access to it instantly. That's just something we're so excited about. And already some of those conversations are happening. So very, very bullish for the future.
I have a question way outside of Caldera. Have you been paying attention to what's been going on Zora at all?
With regards to the token or with regards to the product?
Well, obviously the token's pumping, but like the creator coins and the content coins and things.
Yeah, I've been trying to keep up with it. I'm not like the foremost expert on it, but I've
me either. No, there's just an argument between Tolly and Jesse about whether like meme coins and content coins or creator coins are the same thing, and I don't know, man. I just wanted to bring it up because I thought it was it may be interesting, but I don't know. Like we're just kind of iterating on these different ideas, these different applications, and I don't know. It's just funny to see crypto, especially commentary on CT, kind of go back and forth about what's valuable, what's not. Yeah, I don't know, man. So
totally, yeah. I find in a lot of these discussions, like I feel like I always take like a moderate position. I'm really excited about creator coins, and obviously like there will be some creator coins that do incredibly well, just like meme coins. There's a lot of additional opportunity to add utility, unlike meme coins. And I think like one thing that maybe detractors might miss is that like the fact that you like own a piece of a creator or have something that's kind of akin to like memorabilia, maybe it gets you access to like special meet and greets or fan clubs, etc. Like that's a lot of utility, at least relative to a lot of other coins in the space. There's opportunities for governance. I think like these things can bring creators and fans a lot closer together. It just seems like in the past, a lot of these types of things were pitched as sort of like get rich quick schemes to creators. And obviously that's like not the right approach. It really requires like buy-in from both a creator and their existing community. But overall, like I think experimentation cannot be a bad thing. So we're watching that space with excitement. Maybe some of those tokens get on the meta layer soon.
Yeah, that was kind of like the second thought with regards to this, kind of what we were talking about with kind of like infrastructure and launching change for the sake of it. Just kind of like this fatigue with infrastructure at large. Like we're definitely in the app part of this like infra app cycle that we constantly go through between crypto bear markets and bull markets. It definitely seems like right now we have all the infra to launch apps, to build things that are scalable, cheap, fast. Do you think that this pendulum will flip back towards infrastructure in like some sort of next crypto bear market, or kind of like how are you thinking about infra fatigue as a result of kind of all these different chains and a lot of kind of, I think expectations were very high for a lot of these L2s and such, and they've kind of pulled back in terms of what has been potentially, delivered.
Yeah, I think it's natural, like for any technology to have cycles like this, and it has nothing to do with like prices or anything unique to crypto. It's just like, when infrastructure gets like too good, when there's been an overinvestment in infrastructure, there are legitimate innovations that get developed. Maybe they end up underappreciated by the market for a certain amount of time, but then those improvements in infrastructure allow new apps to be built. And then when we cycle into like an app cycle and everyone's building apps and everyone wants to build apps, eventually we'll discover new infrastructure problems that apps face. And then we'll see a bunch of, the kind of early innovators in those new infrastructure categories will get hot, get a lot of usage, and then that'll bring a lot of investment back to infrastructure. So I think this type of cycle is really necessary in order for like the space to move forward overall. It's exciting to see a lot of apps. I think it's very funny because when we enter this space, like this cycle, I guess on the infra side was about to kind of conclude. And a lot of people now, they don't realize how shitty it was to use blockchain like 3 years ago. Like ETH prices were like, it might cost you $100 to mint an NFT. Like we've actually solved that problem. That was like the #1 problem that people were talking about at the time. Games couldn't really launch on blockchain. They didn't have any certainty about gas prices. Everyone was solving this in some sort of hacky way. Now these are all solved problems. We can have amazing apps. These app builders, they're going to push the space forward and uncover new infrastructure problems. And then companies like ours are going to come in and solve them. So overall, it's just really interesting. But I can understand like a lot of the discourse around it. There's just like a lot of like short-term, frustration or confusion about this sort of thing. But to us and from our perspective, it just feels natural.
Matt Katz, Caldera, congratulations on the Era launch, man. Thanks for joining us today. It was cut a bit short, but I've got a hard stop. I'm gonna run down to the ARC Digital office to meet their crypto team and just see what's going on down there. I'm back in Florida, so I appreciate your time. Enjoy the offsite. I'm sure you guys have a lot of work to do, and you're welcome back anytime, and we'll have you on again.
Awesome. Thanks so much for having me on.
Cheers, Matt.
Cool. Thanks, guys.
Cheers. Alrighty, guys, that wraps us for the day. Good stream. 2 conversations mostly about DATs, mostly about what's going on in the broader kind of public markets, traditional finance, kind of legacy market catalog. And then, of course, Matt from Caldera with their Era launch, getting a bit more of an insight into what the builders are doing and thinking in this kind of like new chain L2 space. I figured that there was going to be a change in kind of dynamic, as Matt mentioned. Good to hear that the demand is still relatively high. But guys, I've got a hard stop. I got to run. Thank you so much for joining us today on the Rollup TV. See you later in the week, and see you soon for new updated, upgraded segments and more. Thanks, guys, and sayonara. See you soon.